Good afternoon, everybody, and welcome to Back in Britain Live. And this is our second keynote event with Janet Moy, who is the Investment Director at Brewin Dolphin. So I just want to tell you a little bit about Janet before we get started. So Janet is an Investment Director at Brewin Dolphin and a frequent commentator in written and televised media, including the BBC, Bloomberg, CNBC, and Reuters. Janet's event today is called Made by the Midlands, the Shrinking Supply Chain, and it will focus on COVID-19 recovery, the economic Marco House view, which will take around 10 minutes. She'll then move on to the COVID-19, sorry, my apologies. She'll then move on to how does that impact on the manufacturing supply chain in the UK and how do we see that changing, again, focusing on that for 10 minutes. And then lastly, the impact on supply chains, visibility, reliability, onshoring, evidence of this happening, and that'll be for 10 minutes also. So at the end of Janet's speech, she will have 10 minutes allowed for any questions. If you do have any questions, please leave them in the Q&A section just on the bottom right there. And if you have any issues throughout, please leave them in the chat box. My name's Yasmin and I'm one of the digital content specialists at the Made-in Group. Again, any issues, please let me know, but I will hand over to Janet now, who will continue with her event today. So over to you, Janet.
Hi, everyone. Very happy to speak to you today from the comfort of my home. I really wish it is actually a physical event at the conference. Yeah, but because of the COVID-19, that's not possible. But still, welcome to the presentation. So basically, as Yasmin has already covered the topics, I'm going to talk about our house view on the COVID-19 recovery, how does it impact the manufacturing in the UK, and the impacts on the supply chains. So first of all, let's get on to the economic situation so far in the UK. So, I mean, if you read the news, then you will be seeing a lot of gloomy headlines on the recent release of the second quarter UK GDP. So basically, we have seen the unprecedented fall in the UK GDP. So, I mean, that's not a surprise to us because we were in like near complete lockdown. But, you know, GDP data is really backward looking. So what we're seeing is actually a gradual recovery in activity. So in June, we did see the UK GDP rising by 8.7%. That was followed by 2.4% rise in May. So there is some recovery, as in we already recouped 1/3 of the GDP loss in 2 months. So on the optimistic side, things are normalizing, but there's no way that this recovery is going to be easy at all. So I think a lot depends on the household confidence, because what we see in the data is actually households have been saving a lot of cash in their banks, as we saw that retail deposit is up very sharply on a year-on-year basis. So it's really a matter of whether households are confident enough to spend, or as well as, you know, businesses, whether they're confident enough to increase their capital spending. So basically, if you look at this chart, we see that basically all the sectors are very much affected by the impacts of the COVID lockdown. So if you look at this, basically services, manufacturing, construction, all seeing very big hit, but the trough has been reached in April already. So similar to the GDP chart that I've shown you, if you focus on the May and June, there is quite encouraging recovery that we're seeing across sectors in the UK. So that's positive. But, you know, ultimately, there would be some sort of economic scarring. So if you look at this chart, it is from the Office of National Statistics. It shows the percentage of businesses that have not permanently stopped trading, but they, like, what percentage are they expected to actually close in the next 3 months? So you can see that, you know, unfortunately, businesses ranging from 1% to 5%, say, they may have to close. And in terms of the manufacturing sector, they say that about 2.1% may permanently close. So that's, you know, in the middle of the range of businesses that say they will permanently stop trading. And, it is unfortunate, but this is why basically a lot of the forecasts have embedded some degree of permanent scarring in the GDP outlook. For example, we expect that it will take approximately 1 year to get back to the pre-COVID-19 level. But in terms of getting back to the trend of GDP pre-COVID, it will take at least 2 to 3 years because of this economic scarring. And, on the positive side, I think there has been a lot of policy support. So what we've seen from the Bank of England is that they have cut policy rates to nearly 0% from 0.75%. And they have also increased their bond buying program. So effectively, that's really provided a lot of easy liquidity to the market. And so hopefully these banks are going to channel all this liquidity into the real economy. And of course, on the fiscal stimulus side, the Chancellor has really introduced a lot of generous measures so far. In fact, the UK has already spent 160 billion to support the economy. And we have seen another extra 30 billion from the summer statement, which is more targeted in nature. So that's more targeted at, say, the hospitality, retail sector, cutting VAT, and also supporting housing transaction. And of course, helping people get back to their job with the traineeship program, and the furlough program is going to be, until October. So as a result, UK is going to see a rise in their public debt, and which is now actually at 100% already. But I think this is not the focus of the Chancellor at the moment. The focus is definitely to kickstart the economy at any cost. So, one thing that I would like to mention is really the challenges ahead in the labor market. So we now know that the furlough program is going to end in October. I think there's still debate on whether it could be extended. I mean, it really depends on the data. So, what we've seen in the labor market data is quite bad. I mean, you can't see in the official unemployment rate yet. It's still pretty low. But if you look at the a number of people claiming for unemployment benefit, it has absolutely shot up. And the number of job vacancies, it has absolutely plunged. So as a result now, just purely, mathematically speaking, around 8 people compete for every single job opening in the UK now, compared to just 1.5 pre-COVID-19. So you can see that is really a very bleak picture. And of course, we keep hearing how the high street are cutting jobs. Like today, we heard from Marks and Spencer cutting 7,000 jobs. That's not great. So we really don't know whether there will be more policy measures coming from the Chancellor. It could potentially happen. Just today, Germany announced that they're going to extend the furlough program for another 2 years. So it's really in huge contrast to what the UK is doing. But of course, it's hard to compare countries to countries. But there may be still hope that things may change if things get a bit worse. So that's really the whole economic outlook. So the worst is behind us. We've seen the trough in GDP. Things are normalizing, but there is some sort of economic scarring, as well as some downside risk because of the challenges in the labor market. But policy support is still there, and it may well be increased in the future. So now let's turn on to the impacts on manufacturing in the UK from COVID-19. So basically, what we have observed is, of course, a plunge in activity in the UK manufacturing sector. But there are kind of some distinct winners and losers. I wouldn't say winner, but relatively less impacted. So basically, the most heated sector is the auto sector, the mechanical equipment sector, and the aerospace sector, which is unsurprising. I mean, the motor vehicle industry is expected to see the biggest decline, like 34% in 2020. I mean, this sector is really exposed to a collapse in demand because it's really, is a big spending. I mean, there is also part shortages from the exposure from the supply chain bottleneck. And so, I mean, it is a sector that is heavily hit. And of course, the aerospace sector as well, because as we all know, there has been a dramatic reduction in the air travel activity during COVID-19, and after COVID-19, there will be also focus on sustainability and traveling and the carbon reduction. So these sectors are really affected, not just in the short term perhaps, but in the longer term as well. Whereas, unsurprisingly, the sectors that actually benefit are the food and drink sector, the pharmaceuticals, and the chemical sector. So the food and drink sector, the production is probably going to be flat this year, is because, okay, while there is increased demand from households in terms of the, demanding from the supermarket, there is actually a fall in the demand from the hospitality sector. So that kind of offset each other. And, this panic buying that we have seen at the start of the pandemic has kind of calmed down for now. So I think household is unlikely to really stock up or increase the purchase any further. In terms of the pharmaceutical sector, I think it's really the only sector to see growth in 2020. That's really because, unsurprisingly, thanks to an increase in demand from for the medical equipment and the increased demand, of course, on the NHS, and especially contributing to this directly would be the domestic companies who are producing all these medical equipment and drugs for COVID-19. So yeah, winners and losers in the sector. And, how about what is actually happening in manufacturing recently? So the one that we like to look at is the Manufacturing Purchasing Manager Index. I'm sure you would have heard of it. So it is a survey sent to private companies in the manufacturing sector in the UK. So it is not actually the actual output as in those released by Office of National Statistics, but I like reading it because it gives you an idea of the outlook about it has a leading element to that kind of survey. So what we've seen so far is, absolutely it has plunged. The worst was in April, but subsequently what we have seen in the survey is there has actually been quite a strong rebound in the headline index and in the new orders. And there is plenty of backlog to be worked through as well. So there should be plenty of pent-up demand, right? So, there is also a return in some sort of business optimism. So what we see is that, these surveys tells us that things are getting in the right direction and there are new demands coming through. So that's all good news. But of course, as I mentioned in the first part of the presentation, we still have to be cautious on the state of the recovery because it is not easy at all. But so far, the manufacturing survey that we've seen is encouraging for now. And so, what are we actually seeing in the industry? So I really like to look at surveys because it gives you kind of an anecdotal idea of what's happening. So according to this recent survey by the Make UK, basically, encouragingly, 99% of manufacturers are now openly trading. But, things are kind of mixed in the outlook because, so far 77% of firms have furloughed their staff. And unfortunately, one thing alarming to me is that actually more than a half of them are planning to make some kind of redundancy in the next 6 months. So that's a little bit concerning. So despite the recovery that we're seeing in the data, it seems that unfortunately some scarring, some permanent job losses are still likely in the UK manufacturing sector. So that's really a cause for concern. And, 40% of firms are still thinking that it will take like 12 months, more than 12 months for things to get back to normal. So I think there's still a lot of uncertainty surrounding the whole situation. So, but the survey data shows a bit more caution for manufacturing sector. So, how has COVID-19 actually affected the UK manufacturing? So I think, there are a few key challenges faced by UK manufacturing sectors. And I think the most important that is being highlighted is the supply chain management, which I'm going to cover it more in detail later. So it is really a very frequently cited concern because as the impact of the COVID-19 continues to unfold, the supply chains basically grounded to a halt. So supply chains are desynchronized, and it means that where you actually have the production capacity in the UK, but if you cannot get the equipment through, then you kind of stand there and you can't do much about it. So it is absolutely key for companies to focus on the supply chain management after what they have been through. So I'm going to talk more about that later. In terms of other challenges coming from the COVID-19, well, one is health and safety for sure. I think that's not just facing the UK manufacturers, but really most employers in the UK. So a lot of manufacturers, they are very worried about the potential legal claims in respect of the health and safety at work, you know, whether the employees may actually catch COVID, and if some catch COVID, then the whole manufacturing production may have to be stopped at some point. So I think manufacturing is really facing a challenge to safeguard and build confidence of health and safety at work while they need to rebalance the need to reopen. So another, another very frequently cited challenge is the finance side. So basically, as soon as the lockdown happens, companies may still have some finances to sustain their activity. But then after a while, I think a lot of people are concerned whether they have enough cash to actually sustain the operation. So, you know, on the positive side, you know, the government has done something. So they have this business interruption loan scheme, they have the bounce back loan scheme. So that added some flexibility for UK manufacturers. So I think, you know, having that support and maintaining the support is absolutely crucial for manufacturers to continue riding through this recovery. So last but not least, I mean, protecting employment is very crucial for these manufacturers. I mean, it is not, I mean, the furlough program really helps. But unfortunately, there will be some sort of job losses. But I think, you know, in the longer term, there will be a rethink in the skill set for this industry, because after COVID-19, what we observe is, you know, a more focus on tech, on digital. So having the right skill in the sector is absolutely crucial for manufacturers who want to excel in the new post-COVID-19 environment. So basically, COVID-19 has absolutely highlighted UK manufacturers' dependence on China, not just UK, but basically the dependence on China on the global manufacturing supply chain. So I think this survey, which is done by YouGov, is done at the early stages of the COVID-19 pandemic. So basically, it shows 31% of small manufacturers, they source components directly from China or countries affected by COVID-19. Another 65% of large manufacturers do that too. And in fact, most of these manufacturers had experienced difficulty in sourcing components. So it is actually a very serious issue. And I think, you know, China is in fact a very important trading partner, basically. So China is the 4th largest source of imports for the UK, and it is the 6th largest export market. So, you know, UK is strategically dependent on China on 229 categories of goods, and 57 of these have applications in some critical national infrastructure. And China is important. And because of the COVID-19, we are aware that, you know, we should be less dependent on China. And of course, some of that has to come from government strategy, because as I mentioned, there are indeed like critical national infrastructure inputs from China. And the recent example is that the UK has banned using Huawei for its 5G. And I think that is potentially just a start, because basically in terms of strategy and long-term thinking perspective, the UK government has set up an initiative called Project Defend. So there are working groups under this Project Defend initiative, which aims to look at the vulnerabilities in the supply chains that are affected by China. And it aims to diversify supply chains. And, you know, this project is quite new, so it is kind of lacking in detail at the moment. But, you know, depending on the results of their findings, I think the government can choose to whether repatriate some key manufacturing capabilities, but I think mostly will be on the pharmaceutical side. But I think this review, this project defend, it will definitely review at the critical supply chains that rely on components from China. And I think it will make effort to protect the technology base in the UK. So, you know, the government has been pushed into doing something because of COVID-19. So I think it's the right direction to go, but it's still early stages, and, you know, we'll have to hear more from it later. And, you know, what about private companies? So according to a survey by Make UK, basically, well, a lot of these manufacturers are aware of the situation. So more than half of them, they say they're already reviewing their supply chain arrangements as a result of the COVID-19 pandemic. And a further 33% of these survey respondents, they say they are committed to reviewing them in the next 12 months. So basically, it shows that most of the manufacturers are reviewing their supply chains at the moment. So I think it's still in, you know, kind of like an early stage. So because a lot of it depends on the recovery, the financial situation of the company. So there's still a lot of uncertainty, but at least I think it is in the right step for now, as companies are aware and they're definitely reviewing their resilience in the supply chain. So what about the impact on supply chain, not just the UK, but globally? What is the sense, like, what are we observing? Is it really happening? So basically, I think, you know, in addition to the COVID-19 situation, geopolitics definitely are prompting more pressure to reshore and to diversify supply chain. I think that mostly come from the US-China tension. So as we all know, President Trump is always posing, you know, threatening remarks on China. Basically, China-US entering a technology cold war where we're going to see more decoupling of US and China technology, whether it's manufacturing or innovation or research, right? So this great decoupling, I think, will have implications on reshoring and diversifying supply chain. And I think it's not really just US-China ultimately. I mean, we can all see how the UK is now banning Huawei as this 5G infrastructure. So I think the change will be more gradual, but it is happening. So I think geopolitics would be a key driver for the change in the supply chain to happen. And, you know, people always ask, how can we be less reliant on China? Because we all know this problem. But what are the options actually? So basically, there are a few. The most talked about is really to diversify the supply chain. Well, basically, it is a good thing because it means less reliance on a single location. It is basically not putting all your eggs into one basket. So that's pretty easy to understand. But of course, that would involve more costs, and it could be more complex. I mean, it needs a lot of planning. And to be honest, if there is a global pandemic like what we've seen, then having another supply chain elsewhere outside China may not be actually the ideal solution, because if it's like a global impact, right? And another potential is reshoring, which is definitely gaining a lot of support because, first of all, you have the security of your home production, and of course, it will benefit the domestic economy. So it should have more national support, you know. Of course, it can make sense, but ultimately, companies need to think about the cost of it, the labor availability in your country. There's operational challenges, and, you know, in this current climate where the economy is in a difficult situation, it could mean a big investment to reshore your production. So I think, you know, it is still early stage. I think people can be thinking about it, but people are more generally adopting a wait and see mode at the moment. So another possibility is the shortening of the supply chain, which means that you actually have fewer and simpler links of the supply chain, which effectively means that you have less suppliers. So the whole system is kind of less complex. But, you know, ultimately, counterintuitively, this may actually benefit China at the end because, I mean, think about it. There are not a lot of countries that actually has the that the capacity in production in China, I'm talking about the whole, the whole chain of production. So China could actually benefit from a shortening of supply chain potentially if this is an option amongst companies. So I think, there is really no straightforward answer, and a lot depends on the specific product you're talking about, or the sector you're talking about. So for example, if you're in the auto sector, it could potentially be much more difficult to shorten your supply chain because it's fundamentally really complex. So we'll have to see, but here are the options so far. So what are the businesses thinking? So again, it is a good way to look at surveys. So if you look at the US, one of the important industry body is the Institute of Supply Management. So the recent survey that they have published is that, so basically most of the members experienced supply chain disruptions. But in terms of asking whether you're actually considering reshoring or nearshoring, more than half of the members, they say they're not actually considering at the moment, right? So that's still the norm, that's still the majority, despite all these concerns and all these talks. But 20% of the firms there, they're actually thinking or have begun to reshore or nearshore some operations. So there is indeed some change happening, but that's not the majority yet. And a minority of them are planning to or have begun to reshore most of their operations. So that's the state of the US. What about in the UK and China? So basically there is a survey by the PwC together with the American Chamber of Commerce. So they are also asking similar questions to their members. So basically, again, a majority of the members have no plans to move their production or operations because of COVID-19. So 84% say no. So some of them say they are considering, but that's not really the majority there. But in terms of the really, really long-term strategy, 3 to 5 year outlook, I think a lot of them, to be honest, they don't really have the certainty to tell. So when you ask them, most of them say it's too soon to tell. But what it means really is that they are thinking about it. So it is understandable they have to make a lot of plans and calculations to make a decision. But I think the survey reveals that while they're not planning at the moment, it doesn't mean that they won't do it. So I think, if a manufacturer is really committing for now at this stage to reshore or diversify the supply chain, etc., it really means that it is now a pioneer. So basically, again, surveys. So basically, what is the most popular option out there? So this is a survey on the CFOs. Of course, they're responsible for the more strategic planning of the business. And what we find is that basically diversification of supply chain, developing additional alternate sources is really the most popular option out there. And whereas, they also think looking into the supply chain, like reviewing, understanding what's actually there is very important as well. But they didn't cite reshoring or offshoring as really a top priority. So it's mainly diversification. And, also the survey reviews that, going forward, the automation part, using technology, that kind of monitoring the operation of the supply chain is absolutely critical. It's going to play a major role in the future. So basically, I'm moving towards the end of my presentation, banging in time. So I think, the conclusion that I've seen from my research is that, a rethink in the supply chain is definitely in focus, not just because of the COVID-19 situation, but of course, because of the whole geopolitical environment that we're in. But what we've seen so far is a lot of companies are thinking, they're planning, they're reviewing, but so far, there's no evidence that a wave of relocation or reshoring is likely at this point. But companies are reviewing, and as I mentioned, governments have strategies to look into this. I think a lot of companies are still quite reluctant because that is a big financial commitment. As I said, uncertainty is a critical holdback element. And I think diversification of supply chain looks so far to be the path of least resistance. And, after all, if you look at how economies are recovering in this global pandemic, actually China is a bright spot. It is ahead of the global curve when we're talking about the recovery in production, in economic activity. And this may be a reminder to companies that why we are in China in the first place. So China did demonstrate that it is still very capable of delivering despite some temporary hold up. So I wouldn't be surprised if a lot of companies would still want to have the production in China. And of course, that will help them access to the end consumers, because now China is also a very big consumer as well. So having that connection in China is absolutely critical. But as I said, diversification of supply chain is absolutely essential. So what I envision is that could be still, very heavily focused manufacturing in China, still very important in the global supply chain, but some diversification, for example, in some Asian regions like, Vietnam, some lower cost countries, or for the US or Mexico, that could happen in the future. But what is clear is that, there is increasingly more focus on sustainability, technology, automation, post-COVID-19. So what we think is all these trends are going to accelerate post-COVID-19, and that would be quite crucial in the future of manufacturing globally. So that's it for my presentation.
Thank you, Janet. That was a really great in-depth analysis about the economic outlook, not only in the UK, but on a global scale. So thank you for that. We've had some great questions as well from the attendees today, some good engagement. So I'll just crack on with those now. So Aaron Kumar asks, what's the inbound and outbound supplies / supply chain value addition as a percentage of the UK's GDP and the last 2 decades trend line? And in addition to that, what are the priority sectors to drive enhanced value addition for the next 1 or 2 decades?
Yeah, very good question. So basically, this kind of data and information is provided by the OECD, but the latest data is kind of 2016, because it's really quite complicated calculation, etc. But if you take that into account, basically the import value added content for UK export is about 15.4%, but their aggregation is both manufacturing and services. So if you just purely look at manufacturing, the import content is about 15 to 30% of UK export. And that content has actually been relatively stable since 2005, but actually it has been declining a bit since 2011. So it really is like a global trend, because there has been some deglobalization going on after 2011. So that is the trend for the import content. And of course, the biggest sector subject to this import content is coke, petroleum, basic metals, and the auto sector. And basically the split between non-EU and EU countries is roughly the same. So right now, 6.6% of that import content is from the EU, whereas non-EU is 8.5%. So basically, for the UK's input into the global export sector, actually that has been steadily improving since 2005. So basically, the value added of the UK input in world export as a percentage share of UK export is 23.7%, which is up from 22% in 2005. And interestingly, actually, the UK manufacturing sector input into China is pretty important. So if I look at the figure, so 7% of UK value added, which is exported by China, is originated from the UK electronic sector. So there is actually quite a close linkage. I think it really showcased the technology advantage and niche of UK industries. And another question is on the.
Yes, so I've just got a few that were in the chat as well, so we'll go through those, and then we'll go through.
Oh, sorry. I remember another question is on the key sector.
Ah, okay.
Yeah. So sorry, the key sector going forward. As I mentioned, I think the trends, not just in manufacturing, but I think globally, is really more focus on sustainability in everything we do. That's hugely important because of climate change, right? And there's also increasing focus on technology and automation. So what I think the priority sector going forward will be really centered around these two themes, which is sustainability and automation. So there will be a lot of green technologies being in the focus, including more sustainable way to produce energy, water, delivering good environmental outcome during your manufacturing process. And I think there will be a lot of focus on the automation, the robotics. I think a lot of the very routine, very boring work could be automated in the manufacturing process, and the final output, for example, there will be more automation on healthcare, the food preparation, the household cleaning activity. There would be more focus on autonomous driving, developing, sensors, computer vision, remote control algorithms, 3D printing. That's very exciting. There would be also, I think, biotechnology is also a very important sector going forward, with more focus on, say, new disease treatment, remote health tracking, the artificial meat, artificial, like products using more sustainable way of production, and of course, more sustainable production of fuel and chemicals in the biotech space. So I think these will all be quite interesting in the focus areas going forward.
Great. Okay. So thank you for that. So our next question comes from Melissa Mooney, and she asks, how much does Janet think sustainability and green issues will have an impact on businesses going forward in terms of growth, investment, and recovery?
Yeah, well, I think I just kind of answered that question in the previous question. I think it is absolutely important. It is definitely receiving more and more focus. So I mean, the manufacturing process itself, it gives an impression that it is quite polluting. It has a lot of carbon footprint, and I think a lot of that process need to be improved and readjusted for the future. I think first of all, there is a lot of pressure from the corporate shareholders front. As investors, we are always being pushed to look more into the sustainable investment and the sustainable trend, and the companies that we invest in will also have to care more about the sustainability trend. So I think there will be definitely more focus and pressure from the shareholder side. So these companies, they will just have to adjust more to a greener environment, for example. And I think the government is also very focused on that. I think not just the UK, but globally the government, for example, in the European Union, the 750 billion recovery fund, a lot is dedicated into sustainable investing. So I think a lot of companies will have to adjust their business model or review their production to make sure that, these are aligned, because these are really the supported sector of national government. And so I think the private sector pressure and the government support means that this is going to be a secular trend going forward.
Okay, great. So thank you for that, Janet. So we have around about 5 minutes left, so we'll try and get as many questions answered as possible. So from an anonymous attendee, they've asked, are there any indications that the electric car market would drive a recovery in the automotive sector? And how are governments supporting this in different countries as part of a larger decarbonisation effort?
Yeah, so autonomous driving is definitely like a big theme for the future. I think the UK, I think maybe a lagging in that front. Actually, not just the UK, but I think on the European Union, the whole autonomous driving electric vehicle, it is in development, but so far it is kind of lagging versus the US and China, because for example, China, they do have a lot of subsidies. And in fact, the Made in China 2025 campaign. They involve state subsidy to targeted sectors, which involves this kind of autonomous vehicle, very premium tech, automation, that kind of technology. So the government does have a lot of target and subsidy for these industries, and of course, there are also subsidy for consumers to buy these products like electric vehicle. This subsidized and you pay less tax. So it is definitely hugely encouraged. So in China, not just the production side, the research side, but the consumer side, they're very heavily encouraged. And in the US, well, we all know that that's really the forefront of the technology innovation for electric vehicles, most notably Tesla. And Tesla having its production in China. So these two countries are really at the forefront. So in the UK, I think the investment and the research kind of is a bit lagging at the moment on that front. So there is definitely room for improvement. But I think so far, what the government has done is really to boost the consumption side. So I think there are some incentive for the purchase of electric vehicles. But in terms of the autonomous driving, I think there's still some way off.
Okay, great. Thank you for that, Janet. So we've got 3 more questions we're going to get answered today. So our next one's from Sam Taharia, who asks, with the localized supply chain, how important do you see in the integration of supply chains to maximize performance and minimize costs?
Yeah, so I mean, it is worthwhile to have like a localized supply chain, because say in the pandemic, when all your cargoes and your planes can't get through, at least you have some sort of security. But then, the thing is about cost. It is really costly to reshore or have all the parts you need in a localized place. It's actually not very feasible. I mean, it depends on the industry. Say, if you're talking about the auto sector, how likely is that you can actually source the thousands of parts and tools just within the UK? It's actually not quite possible. It really depends on the sector. I think there is appetite for it, but in terms of the labor, it is actually also difficult. I mean, with the UK exiting the EU, we all know that some workers will be lost, and it's hard to actually find that kind of skilled worker in the UK. So the cost, the labor, the complexity of sourcing all the equipment, it all adds up. So it is a good idea, but in terms of the actual implementation, it may be actually not that easy.
Great. Okay, thank you. So our next question comes from Mark Weymouth, who asks, do you think diversification and perhaps anti-China sentiment might help India develop as a competitor / alternative to China for manufacturing / supply?
Well, I think it is possible, but I think probably it will take quite some time. I mean, it depends on products. I mean, if you're talking about the very low level kind of textile, just really simple, not high tech kind of product, I think it could be happening. But in terms of the really, talk about the electronic sector, the tech components, the telecom input, etc., I think it is not that easy to replace China, because China does have the know-how to have production at that kind of capacity, at that kind of desirable price point. So it really depends on the sector you're talking about. We are already seeing the lower level manufacturing like textiles going to Vietnam. That happens actually pretty well, in Bangladesh, India. So that is happening, that has happened. But in terms of more premium manufacturing, which we actually will see more of that in the post-COVID-19 world, I'm a bit doubtful on whether India can actually be like a replacement for China. But I think it could, I mean, it may well happen, but not now.
Perfect, thank you. So our last and final question that we're going to answer today is from Lauren. And Lauren says, Janet, how diverse do you think the US November elections are? And what is the potential impact on supply chains, e.g. Biden wanting tech breakup and focus on climate change, and Trump very transaction driven?
So one thing is certain is that this technology decoupling is happening anyway. So it's going to be divisive anyway, regardless of who is going to be in the White House. It's really because the fundamental issue is the rise of China over the past decades, where China's manufacturing as a percentage of global is now 30%, coming from just 5%. And that really has displaced a lot of jobs. It really raises a lot of anti-China sentiment. And of course, the really significant improvement in the tech know-how of China is phenomenal. China is filing more like tech patent than the US now. It's just phenomenal. And I think regardless of who is in the White House, US will always regard China as the next, not the next, but the major competitor, or even surpassing US in terms of technology at some point in the future. So that division and that decoupling will continue to happen. But in terms of the aggressiveness and volatility of that, I think President Trump is definitely going to pose more risk, because he's definitely more erratic from what we have observed over the past few years. He can just go on banning stuff without clearly thinking of the implications. So that would definitely be more volatile going forward. I think, Joe Biden government, the tech decoupling will still happen. The reshoring, the supply chain, the conversation, it will still happen, but maybe in a less aggressive way than compared to President Trump. That's my opinion. Yeah.
Great, thank you so much, Janet. That seems like to be all the time we have for questions now. But I just wanted to say a massive thank you to yourself for being part of our event. It's such a great speech, and I'm sure all of our attendees found great value from it. So thank you so much.
Thank you.
I just wanted to tell the remaining of our attendees to head over to backinbritain.com and head on to our virtual drinks today from 3 till 4. There's also lots of other events like Janet's today. Tomorrow we have lined up Reese Herbert, who will also give us an economic outlook from Lloyds Bank. So make sure to head over to there to sign on to any more events like the one today. So thank you again, Janet. And
thank you so much.
I hope you all have a lovely rest of the day. Thanks.
Bye.
Bye.
Bye-bye.